So now let's get to the Ask Weekend Investing round number 36. These are queries that you have raised over Twitter or X, sorry, or directly to us, and we try to incorporate those every Friday. Uh, and if we are unable to get to all the questions, you can either send us your questions on email or let us know in the next time. We also have put up all the previous 35 rounds that are available on YouTube. So not just, I mean, these are questions not just about small case or weekend investing products. They are in general about markets, about behavioral aspects of the market, about allocation, about you know maybe global markets, gold. All sort of questions are there, and the questions continue to get better and better, as we can see here from Mr. Rathor. Can you please share your thoughts on liquidity cycles? How many liquidity cycles we've had since 2009? When assigning ranks to how many days of data do you use? Do you benchmark gold? If yes, against what? Okay. So a lot of questions. I'll try to answer to the best of my ability. So liquidity cycle, if you really, were to define um, the liquidity cycle, I think we started off on this liquidity cycle from 2008, and that has not yet sort of ended, in the sense that the amount of money supply that started building from 2008 onwards, that trend has not stopped. So if you see, for instance, US money supply, and especially during COVID, it's an exponential curve, and after that it has plateaued somewhat, but it has not come down. um, so from that point of view, I mean, the liquidity continues to be there in the system. Of course, how that liquidity is impacting India is dependent upon how the fund flows are coming in, going out, and we've had several such cycles since 2009. So from 2009 we had one wave in 2009 to 11. Then there was a lull till 2013. Then we had a wave from 2014 to 15. Then there was a lull. Then 18-19 was a down wave, and then you had, sorry, 17-18 was an up wave, and then from 18 top till 19 mid was a down or a stagnating move, and then COVID sort of happened there, and from there, from March 2020 till October 21, we had a huge up wave. Then we consolidated for a year and a half, and then from 23, I think March till uh, September of 2024, we had the next wave come through. In terms of assigning ranks to stocks, how many days of data do you use? It is same for all schemes. So it is not same for all schemes. It depends upon the design of the scheme. The date could be anything. It depends on the design. It could be 3 months. It could be 6 months. It could be 12 months. It could be 15 months. It could be a combination of them, and so on and so forth. Do you benchmark gold? If yes, against what? So my benchmark for gold is, it remains against the country's inflation rate. That is what the purpose of gold is for me. So the as long as gold returns are beating inflation rates, and as long as gold provides you can say inverse correlation to stock market performance, especially in down years. That's sort of the benchmark I use. That if it is doing well on those two fronts, I think gold is doing well. Shankar says, feels like the COVID fall was much easier as it got done within a month despite being sharper. Price correction seems a bit easier to digest than a time correction. What is the mindset to have for these two types of corrections? Very nice philosophical kind of questions. Happy to see that very evolved investors are, uh, you know, associated with weekend investing, and a lot of times I am learning from these kind of questions and queries and discussions. So I don't know if I have a right answer for you, but absolutely right that it's just like you hurt yourself, and whatever damage had to happen has happened, and then you are on the path of recovery from that after, as soon as you get out of that shock. Whereas if you get some internal disease which is going to take years to recover, even though the external damage is not there, that is a very difficult one. So uh, the mindset uh, the mindset needs to be, regardless of these two conditions, on what is our expectation from the market. So if we are if we are having a mindset that we have come into the market for this many years, and there is a possibility of all kinds of damage that will happen on the way. It may be a sharp damage, it may be a slow damage, but I know at the end of the rainbow there is a pot of gold. So as long as you keep your focus there, and not just the longevity of your staying in the market, but of course also your strategy, that to have that ultimate conviction that yes, come what may, I am very sure my strategy is going to sail me through. That conviction should be there. I don't know if I'm able to pass on that conviction to you for you to have on weekend investing. But if you ask me, I mean, yes, these days and these seasons of fall are painful, but I'm very, very confident and sure that we'll see good days again. So from all those perspectives, at least I don't get perturbed. I mean, I don't lose sleep on this. But to translate that confidence to others who are following this strategy is something, of course, it's a challenge for me to make sure that I'm able to pass on that confidence. So the mindset needs to be that yes, we are investing in a growth economy. Our runway is set. We are going through some turbulence, and we just have to make sure that we are able to survive this turbulence. That's all. I think that mindset sees me through, and I would wish and hope that everybody could, uh, you know, have that kind of a thought process. This short termism that I could have sold 2 weeks back and I could have gotten in today, I think that creates a lot of uncertainty in the mind, and you start to doubt yourself that maybe my strategy is not right. I should have done that. So over several iterations, several cycles, everybody will come to a maturity in their thought process that yes, I don't mind some ripples, but I know that I'll sail through. To reach that, you will have to go through some iterations. If this is the first or second down cycle, it is still bothering. But for an old person like me who has seen tens of such ups and downs, it doesn't bother me anymore. So that's sort of the mindset you want to develop early. I developed it very late. Perhaps you can develop it much earlier. uh, Arjun says, what's your take on gold monetization scheme? How safe are gold ETFs? Where can I find the audit reports to check whether they have physical gold or not? So gold monetization scheme, I think, has failed miserably, which is a scheme through some empaneled banks like State Bank, HDFC, ICICI, etc. There are like 4 or 5 banks, I think, which do this. The scheme, as far as I know, is that you put in your physical gold. They'll give you some, I think, 0.5% or 1%, depending upon the tenure of your deposit, which could be 3 years, 4 years, 5 years. I think that is the time frame. And at the end of it, you can get your physical gold back, or you can choose to get the money uh, your gold is worth at that point of time back. And uh, essentially it helps in safekeeping of your gold while also earning you a small amount. That's about it. And because the amount of gain is so small, uh, and I don't believe that that is capital gains tax free as well, but correct me if I'm wrong on that. So it has not taken off at all. Like few hundred, I think few hundred kgs of gold is what they have been able to to get in that, not even tons. So gold monetization scheme has not worked. That was the effort by the government to make sure that physical gold comes in, and then that can get used so that people don't have to import from overseas. But that has not taken off. On gold ETFs, just I think a week or two back, I had a conversation with the top management in uh, Zerodha AMC. And in the past, I've also had conversations with Nippon AMC, the manager of the gold ETF there. And they say that they don't lend their physical gold. Uh, the gold sits with the custodian. They have periodical audits. These audits have to be submitted to SEBI, I believe. And they also offer that if you come to our office, you can take a look at these audit reports. So that's how much I know. But you must connect with your gold ETF manager or provider and check with them how if they will be able to share those audit reports online or on website, etc. But I don't think they are available for consumption in public domain. Paraj says, is it a good time to enter momentum strategy given that the markets are corrected or such timings does not matter? So timing can matter. I will not deny that. But usually people are not able to time the market. Are you able to see the difference? That if I tell you that market is going to bottom on particular day, you will buy that day and you'll have a great next 2 years. That is possible. But usually when markets bottom, the fear is at its extreme, and then there's a reaction of the market. People still believe it is just a reaction, it's a bounce, it's going much further, and then it goes even further, and then suddenly you find that you're 20% off the bottom and nobody's believing it yet, whereas it may be a start of a new rally altogether to a new high. So it's very difficult to get your mind to think that way once that move starts to happen. Whereas if you allocate to a momentum strategy, like for instance several of the absolute momentum strategies are sitting in cash, 60 to 80% cash. So if you come into those strategies right now, they won't allocate to stocks, you'll still sit in cash or liquid Bs, etc. But at least when that move starts to happen, mechanically you will get invested into those stocks that are leading the rally the next time. Mentally, because we are human beings, without proper systems, it is difficult to catch a stock that has started to go. And that is the whole beauty of momentum investing, that it is contra intuitive. uh, so I always suggest that if you want to enter the market, come at any point of time, no issues, but gradually phase out your period of investment. If you want to bring bulk amounts, don't jump in at any point of time. But when especially absolute strategies are in high cash, the risk is very low that from those points you will really lose anything big. But yes, in rotational strategies, once the bottom is made, then of course they will be flying in a big way from there on. So to answer your question, if you want to come in, certainly you should come in and spread out your money over some period of time. Trading for living says, I'm subscribed to MI20. As you know, it's in drawdown of almost 40%. It has fallen more than the index. Now my question is, have you ever experienced such a move in your backtest? That a strategy has lost more than the index, and what happened after that? So many times it has happened, especially in rotational strategies, because uh, you know, you are going much faster than the index when the index was rising, and now you are falling much faster than the index when the index is falling. Hopefully it should go into some stocks from that index which are not falling as much, and as the crisis deepens as it is doing now, it should move into stocks which are not falling as much, and over a period of time, possibly even rotational strategies can outperform the index for some time on the fall also. But right now it has not happened yet. So yes, this has happened in the past. If you go to our chart of the previous down moves, potentially you will be able to see what happened in the previous crisis there. If that data is not there, please drop us an email, we'll try to provide you with that data. So yes, this is possible, and it has happened in the past as well. Kautuk Patel says, if strategy example MI Evergreen has 20 stocks, only one stock triggers a sell signal, but three stocks trigger buy signal from the same universe, then how will rebalance happen? Because there will be rules basis which you will be able to distinguish between those three stocks. So whichever stock will fulfill the buy rule the best, that stock will get picked up. Yatharth Desai says, question for tomorrow, Friday session. Okay, so this question came in yesterday. Gold price is very high. Should we keep investing when we already know that gold is high? So if we already know what is going to happen, then of course you should not invest basis anything. You should invest basis what you know. If you know that gold is going to fall, just go short on gold in a big way. That's the best way to do it. But if you're not sure, then you follow the strategy. and let it uh, get you out when it meets the exit criteria. So you have to decide one of the two. Either you have some crystal ball or knack of calling tops and bottoms. If you have that, don't follow any strategy. But if you are following some strategy, then don't try to put your that we already know that gold has stopped. What if gold goes to 1 lakh? What if gold goes to 1.5 lakhs? Nobody knows, right? So don't never, in my view, you don't have to agree with me at all. I can only share with you my view, what I think about things. I think 99% problem with most investors is that they want to predict things, and they feel that they know more than the market. This problem creates the most issues for most investors, because you think that the stock should have been worth this much. You think this gold should drop from here. So that is the problem. And I follow the markets, BBC principle, Bhav Bhagwan che. What the market is doing, I am a follower of that. I'm not trying to predict the market. Okay, Hemant has another question. Eh, two questions. I have a view about gold that does not match with yours. Okay, no problem. Let me start with a question. Why does gold have value? Is it due to its ornamental value? When I buy a company, I am making people work for me. When I buy gold, what am I paying for and what am I getting in return? So, gold has value because the human species has ascribed or prescribed value for it. And there is a 6,000 year history on it. Now, can that be erased? Yes, it is possible. It's possible in that in the next 50 years, 100 years, 2000 years, gold may be seen as not having value. But has it happened in the last 6,000 years? No, it has not happened. Gold has been associated with being money for 5,900 of those 6,000 years. Sorry, 5,950 years out of those 6,000 years. It is only the 50 years since 1971, sorry, 54 years since 1971, that gold officially is not money. But 5,955 55 years, 45 years prior to that, it was money. So even today, why do central banks hoard gold? Why is China accumulating gold? Why is Russia accumulating gold? Why is our RBI accumulating gold? uh, why is everybody fighting about gold? The London Bullion Metal Exchange is getting swarmed with gold demand, because at the end of the day, the entire structure of the world monetary system is based on gold. At least that is the current structure. And what view you have is the Buffett view, that gold is a pet rock. What is it of use? But Buffett is not right on everything, right? I mean, Buffett is right on some things. In fact, his father was a big gold bull. If you go back and read the paper written by Mr. Warren Buffett's father, it tells you that gold is the only sort of hinge on which the entire world is hanging on. So maybe Warren was a rebel kid that he did not want to go his father's view. Uh, but yeah, I mean, this is, I mean, when you buy a company, you're making people work for you. That's fine. I mean, there's no question about that productivity, gain that you're getting out of it. But then at the end of the day, you are measuring gold in dollars, and dollars is getting printed on a printer, right? It is paper. So if the unit of the currency in which you are measuring everything itself is just a paper, then it makes no sense really. If you ask me, so what you should be doing is measure the performance of a company, or your wage growth rate or inflation rate or GDP in gold terms, and then you will see most of the things don't have they have zero growth in this world, because all we are doing is we are just creating paper every day. We are distributing that paper causes everything to go up, and we feel very happy that we are getting richer. But actually it's not happening that way. So I mean, it's a long subject. I don't want to bore you on this, but uh, I mean, you have your view, that's fine, but the world has its view as well. Sahil Sharma says, "Will you also do what Dash has done? Channel content is only for paid members." So I know what you are intending to say there. Uh, no, we have no intention of trying to create a paid membership for channel content. Um that may be somebody else's idea to milk, whoever follows them. But we don't see. We are not doing this for money in terms of the YouTube and Twitter and the content that we make. Yes, we want to be out there. We have products to sell. I mean, there's no doubt about that. But I don't want to use the education to sell for money. And that's my principle. In fact, uh, just 2 weeks back, and I'll share with you here. Vivek Bajaj called me and he wanted me to appear on his uh, seminar that they're doing. And the first thing that I asked him was that, is it a paid seminar? And he said yes. So I said, as a principal, I don't do paid seminars. I mean, he's a very dear friend also, uh, and I've done this in the past. I mean, Money Control and all these folks, please come to this seminar and present. I say, if you're charging your users, I don't want to be there. So I hope this answers your question, and no disrespect to Vivek or Money Control, but I just don't want to have money come in between when I'm sharing what I'm learning with whoever is watching this. There should not be any money part available there. Some people ask me, why do you run ads on your YouTubes? That is another question that comes through. So we were not having ads on our YouTube for a long period of time, and our YouTube channel was stagnant. Then some YouTube strategists told us that if you don't run ads, then YouTube will not promote your videos because they'd get nothing out of it. So hence we run ads, but that money that we get, and I can share with you, it is like 100, $200, something like that, is not even worth talking about from that point of view. Shaukat Ali says, thanks for the amazing content, Alok. Thank you so much, Shaukat. Are you planning to launch gold variants of existing small cases similar to Evergreen? So this is a constant demand. We did one with Evergreen, um, but I also believe that most of our strategies are not like wealth products. These are like equity products to be used in your umbrella or basket of wealth management. So Evergreen was like one such experiment, I would say, that did well, and uh, it's very easy to recreate a evergreen like situation for any of your small cases. So you just allocate some amount which you can rebalance or do a monthly or a 6 monthly weight rebalance, even if you have gold outside the small case, so not necessarily have it within the small case. The other challenge is also that the gold ETFs that are available don't have unlimited depth also. So if a huge amount of market order goes into a gold ETF, that can also create some problem at times. So that is another constraint that we have. Shaukat says, what are your thoughts on diversifying in China markets, considering we already have some exposure to US market? So I really can't say, because I haven't done many studies on China market. At least we have a US market experimental educational product, but we don't have anything in China. Um, so I really can't say that. But when you see China market versus India versus US, it is highly uncorrelated, and hence it will give very good diversification if we add that component for sure. Third is, do you recommend investing in real estate? Yes, I feel this is the worst and most ambiguous asset class with no transparency of price quality. So I think, and I don't want to rub people off in the wrong way, but I think a lot of influencers, a lot of equity folks have not done justice by pushing people away from gold, from real estate. uh, you talk to any real estate investor and ask them if they are not happy with their investment. You'll find very few lemon. See, lemon cases are there everywhere. You buy a stock and it was a lemon. That can happen in real estate also. But The if you talk to a homeowner, he or she will tell you the kind of emotional peace of mind that you get once you have your own house, which uh, are going to stay for a long time. And the global context is also there, that whether it is US, UK, Singapore, anywhere, the pace of growth of wages has never kept pace with the real estate growth. So the more you delay your real estate investment, the tougher it will be for you to buy real estate at a later stage, if you intend to do so. If you intend to stay a tenant your entire life, then probably you can stay that. But I think, from a personal perspective, I would always recommend that as soon as you are able to comfortably buy a house for which you can pay an EMI, you should do it. It's a great feeling. It's a great feeling once you become a house owner. It's a great safety net for your partner, for your family. Um I can't say, and it gives stability to your entire existence, actually. I can't say enough on this. So my sense is that yes, markets will do well over a period of time, but you can't sleep in your demat account. So that's the end of it. That Okay. Don Corleone. Okay. He says, once and for all, please tell us what is the best way to invest in gold? No ifs and buts. How would you invest? So, sir, physical gold is the most prime, that's like the gold standard of gold. And physical gold is right there. And that is what central banks, institutions, HNIs, family offices, they go for that. The next best is paper format. The next best is paper format. Within the paper format, you have sovereign gold because it is backed by the sovereign. So sovereign gold bond takes the top of the paper hierarchy. Then comes ETF because they have lower cost of expense ratio versus mutual funds, and they are easily tradable on the exchange. And the taxation benefit is there now, similar to physical gold. Uh, and the third one will be sort of, you can say, digital gold, where all these wallets etc are asking you to pay for the gold, and they will store it. That I'm not so sure about, because the longevity of these platforms itself is could be of question, and they are not regulated. And the fourth form would be to go into gold equity, so stocks that are related to the gold industry. But I think that is the worst form of investing in gold. I mean, you invest in those equity for the purpose of equity, but if you invest in them for purpose of gold, because the uh, basic criteria, or the beauty of gold is that there should be no counterparty risk. So as soon as you involve a third person between you and the gold, there is a counterparty risk. So for instance, India's RBI physical gold is kept in Bank of England. That is a counterparty risk. We may never get it back. So best is to have your gold with you, and that is the most pristine form of gold holding. Okay, Paraj has another question. What were the reasons why gold corrected for years in the past, like 1980, 2002, 2012 to 17? Should we be cautious now? So, gold, like any other asset class, has up cycles and there are corrective cycles. If you will go see the cycle of gold before 1980, so from 1971 to 1980, gold went up like, I think, 30 times. So if something goes up 30 times in 10 years, obviously there will be a huge long correction, and that's what exactly what happened. Then from 2001 to till 2012, gold went up 8 times, and after that it corrected for the next 5 6 years. So this will happen from time to time. Gold has long cycles. I don't think we are anywhere near the top of a gold cycle, but intermediate cycle may be topping out right now. Maybe we'll have $100 to $200 fall in gold, but I think we will not stop before several thousand points on the gold market above. That's my sort of speculative call on gold. And I always look at gold for from a allocation perspective. So if I'm allocating 20% of my money to gold, 30%, 40%, whatever it may be, I'm not trading it. If I make a lot of money in equity, I'll reshuffle it back to, let's say, 30% in gold. So some money will go from there to here, and that's how it will go forward. If equity goes down by a lot in a year, I'll move some money from gold to equity, depending upon that proportion, and go forward. So I'm not trading gold for the sake of making money in gold trades. But you could be doing that. That's fine. I mean, from trading perspective, yes, the setup has to be done with proper stops and so on and so forth. Narsima says, you promised that you will bring US based strategy in March 22. Nothing was said after that. So we uh, did not get clarity from the regulator about rolling out a US based strategy. Till date, there is some gray areas there. Uh, we run a US strategy, which is basically an experimental educational strategy, you can say. That's available on the Weekend Investing website. You can see that and maybe create your own strategy looking at that. That's possible. So we have come to an end to the Ask Weekend Investing round number 36. If we've not been able to take your questions, please do send them in on email if they are waiting for a quick answer, or you can ask them next week as well, or you can put them in the comments. I try to go through the comments every now and then and answer the queries there. All the previous episodes are here. You can go through them. If you like some general knowledge kind of things on the market, a lot of things get discussed, rightly or wrongly, is something else. I can only give my view. Whether you will like it or not, I don't know, but it's all there. So thank you so much for watching. Have a great weekend. Don't worry too much about the markets. They will resolve themselves over a period of time, and that's how the markets will always be. Do like and share these videos, and please subscribe to the channel. Thanks. Bye.